Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. The title of the video is Fibonacci Training. Alright, in this video we're going to look at Fibonacci extensions. Alright, and I'm going to share with you some effective, several, effective Fibonacci, trading, strategy. Alright, we are looking at the dollar-yen currency pair, a currency pair that are called the crazy currency pair. Alright, and the price now at, is at, let's start afresh, drawing the Fibonacci extension on my chart. This trading software that I'm using here, TC2000, a beautiful trading software. Alright, you can use it for Forex or for stocks. Alright, so drawing the Fibonacci retracement. You can see that the dollar yen is hanging here in a zone of 161.8 Fibonacci. Okay, that's the turquoise line here, 161.8% Fibonacci extension zone. Some traders, you can trade that we're buying here, acknowledge that hidden, resistance level. The Fibonacci extensions allow market participants to identify hidden support and resistance levels. Alright, you may not see the horizontal static support and resistance level, but when you use the Fibonacci extension will reveal to you, several, hidden support and resistance level. Now, when we are talking about support and resistance level, the first thing that is coming to the mind of traders, support, we must buy. Resistance, we must sell. Okay, but there's something else I want to add to that. Okay, talking about Fibonacci training, all right? When you hear support, always think of two things. Support, priority to bullish signal. But we can sell if the price D below that support level and the final resistance. So what I'm trying to do here is a bit of a brainwash, all right? Or a change of habit or, that trader adopt. So very often traders see a support when we are saying to trade around key support and resistance level. So they think that they must definitely buy at a support level. But what I want you to correct, to rectify in your mind is that when you hear support, it means priority to bullish signal if the price find a support, all right, or gain a support, all right. But we can sell if the price D below that support level and find a resistance. Simple. So here this is a support that I draw on my chart. All right. If the price D below it like this, and then come back and retest it like this is a bearish trade setup. We apply the trading drill and then we want to enter the trade on the edge here, expecting the price to go down. As the price going down, remember this support here must be taken out. If this support is not taken out, this resistance is not valid yet. So though the price final resistance here start going down, this is sometimes new trader should pay attention now, because sometimes you see to trader break below, retest, turn around. So the price break below, retest, instead turn around, traders sell. But they forget that the price must break this resistance, this support here. So if you fail to break below the support, this resistance is not solid, it's not reliable. So though we sell here, it start going down, which is a low risk entry point, we must be prepared to grab some profits if you are swing trading, or monitor the reaction of the price right here. Because sometimes the price will start going down like this, but will fail to go below this low here. In a downtrend, the price might display, lower lows and lower high. It makes sense? The opposite is also true. All right. So we have a resistance level. The first thing that is coming to the mind of traders is sell. Okay. Talking about brainwash, if you allow me to use that word, or a change of attitude, all right? Priority to sell signal in a resistance zone, All right. Another thing I want to clarify quickly, you will hear me very often talking about resistance zone. The reason why I prefer that word is because you will have a key resistance level at this, a static key resistance at this. But sometimes you see the price will go above it, all right? So they say, oh, George, I thought this is a reliable resistance level. Yes, but the market want to test, okay, the zone above the resistance level. And if you see come back below it, beautiful sell, all right, beautiful sell. Turn around. This is what we call turn around. See, resistance goes above it, turn around. That's a beautiful turn around. On the edge, use a tiny stop loss, all right? So, the best scenario is that the price stop exactly on resistance, and we use the trading drill, setup, signal, low risk entry point on the edge here, because we are hiding our stop loss behind this resistance level. But this is about priority to sell signal. But you don't want to stop there always. Remember what the professional are thinking. They know that a financial asset can go up and also can go down, okay? So the next thing that can happen at the resistance level, which a lot of traders, okay, do not prepare themselves for, I can break above that resistance level, all right, and we gain a support, and instead of going down more, it will just go up instead. This is what we call a breakout. So though we are saying priority to bear a signal at the resistance zone, price can perfectly break above, okay, resistance level, find a support. In that case, the music has changed, and we must change, okay, the steps, so to speak, okay? So I clarify that. So we are saying that the Fibonacci extensions, okay, reveals to us hidden support and resistance level. So we clarify support and resistance level and what we need to do. So right now, as I'm speaking to you, you see that the dollar yen was going up and hit the level of 161.8% resist Fibonacci extension level. It's a hidden on the, you see, on the weekly chart, we can't see any resistance here, all right? But so this is a beautiful hidden resistance level. See, the professional acknowledge it. So as the price comes here, this is a bearish setup. You see here, it went a little bit above it. Am I talking to myself? You see, zoom into it, George. All right, you went a little bit above. This is gorgeous. I prefer that. I like it. Go above it and then turn direction. All right, you want to see more? Or you want to appreciate the gorgeousness of what is happening here? Where is my data now? Okay. Now, here it is. You see here? Turn around. After this candle here, priority to sell. You see how it is? Turn around. This is what we call turn around. This is nice. Goes above and then turn around. Okay. Now apply the trading tree because you're on a daily chart. All right? You're on a daily chart. If you are swing trading, you place your stop loss up here. All right? Use the TSCWSY08. You receive a sell signal after this candle must close. If you are using trading, daily candle here is closed. Then go to the signal time frame, you take it. The best place for the stop loss is up here. If it's too much for you, you can use what I call dynamic stop loss. Check the video that I call how I exit, okay, trade like a pro, adjust to your channel, okay? Let's go back to the weekly chart. I'm speaking slowly because this is a Fibonacci training to clarify a few things, okay, so we can avoid, okay, Fibonacci trading mistakes or errors, okay? So we hit this 161.8% Fibonacci extension zone. By the way, if you want to know more about Fibonacci extensions, go to www.dayprotrader.com. I would like to inform traders that very soon I will be posting another new page, web page at dayprotrader.com about Fibonacci retracement. So stay tuned, all right? So there are videos here, a page that I call retracement, but there is a better place, a better web page that I prepare now because I can write, as I told you, I like to record video, I can write, okay? So I write more now, so if you check it out, that new page about Fibonacci retracement is coming soon. All right, so at dayprotrader.com. Let's continue. So price come to this zone now. Okay, that's what we say resistance zone. Yes or no? Okay, it's a resistance zone. Okay. All right. What do we need to pay attention to? All right. You remember what I said already, that I call this pair crazy currency pair. You are trading the dollar yen. You are fighting with the Federal Reserve. They are the one messing around a lot of traders here. All right? Smartly. Nothing wrong with it, but they are also market players. So if you are trading the dollar yen, always keep your eyes on the ball. Talking about economy news at Forex Factory. Keep your eyes on the Federal Reserve, what they are trying to do, what they are saying to the market, all right? Because when the price was here before, support to go down more to display beautiful second wave, the Federal Reserve play with the market nicely and they push it up here. It's a resistance zone, all right? So what do we need to do now? Okay, we see that it started going down a little bit here, okay, on the weekly chart. We will use, okay, so you are at a resistance level. What can you look for? You remember what we say, break below, retest, break above, retest, all right? You understand that, support, resistance, okay? Another thing that we look for is a bearish chart pattern, especially on the signal time frame. You may not see a bearish setup on the setup time frame, but when the price is at a resistance level, you may see on the signal time frame bearish chart pattern, head and shoulder pattern, all right? Price display a lower high after a lower low. Okay, you see here this one example here. I like this beautiful color. You see here, from here it went down, display this low here. Yes or no? Display low. Okay, followed by a lower high. Okay, it's a bearish here. It's a bearish setup here, right here. But look again. There was a low here, followed by a lower high. But as the price going down now, it failed to go below this low. So it's not very bearish anymore. Looking at the reaction that is happening here, doesn't mean that it's bullish. But the language of the price does not confirm the bearish momentum yet, because we didn't display a new lower low. In a downtrend, what we are paying attention to is the lows. We want to see lower lows. In the uptrend, we get a bit excited, but we want to keep eyes on the high. Is it displaying a higher high on any time frame? 3-minute chart, 5-minute chart, okay? Any time frame, all right? So what are we doing here? Okay, so we can draw also here, joining this point and this point. So it's a triangle, isn't it? So here, people were selling on the edge, they take them out, okay? Here, this messy. That's why I like here, CWS 008. So if the signal fail, you know you don't want to hang around and lose a big chunk of money. You know straight away. So now the price sitting on it, so to speak, sitting on it, all right? Like a baby on the lap of his or her mother, all right? She's sitting on it. I like that, okay? Sitting on it nicely, beautiful. Yeah. So, though we are in a resistance zone, the price is not very bearish right now. See, even this, okay? Bearish trend, it's not very bad. So, traders, professional traders would prefer to buy in this scenario from the edge of this trend line and see what's going to happen. But one thing that you don't want to forget, you see this candle here, learnable candlestick, Steve Nissen, okay, Google it, Steve Nissen on Amazon, you can purchase some of his book, okay, and in fact, go to stochastic.com, you will see a video, Amazon, okay, dayprotrader.com or whatever, and then you'll see a book from Amazon purchased from Steve Nissen. So this candle, what is it? You see, this candle did open here, but went down a bit. You see, it opened here, went up all the way here, but closed bearish. You see, whenever you see the shadow of this candle like this, all right, it's what we call distribution, all right? It's a distribution. This one here is a doji. You see the tail? This is accumulation. Anytime you hear the word accumulation, we are talking about support. Every time you hear the word distribution, we are thinking of resistance. So there are people who sold it here. So though the price is sitting on the edge of it like this, if you are buying here, be aware of the people who sold it here. They may come back and sell, or probably they are still in the market and they want to defend their position. So at the Fibonacci extension zone, this is the kind of investigation that we can do. Look for, okay, bearish chart pattern or the signal time frame, draw trend line as I'm doing here, analyze the language of the price itself. This is about a chart analysis, all right, to know exactly whether we have a bullish, okay, setup or whether the bearish setup is ready or not. You will do this on the hourly chart, 2-hour chart, 30-minute chart if you are using Fibonacci extension. The common Fibonacci trading mistake that traders are repeating consistently, price hit a Fibonacci zone, they will sell. Unless you develop a trading system and the statistic has proven that a particular stock will always change direction at 161.8 Fibonacci extension zone. There are some stocks, they do exactly the same thing over and over. So some of the algorithms know about it. That's some store they retrace most of the time 61.8. So they set the software to buy all the time if that particular store retraces to the 61.8. The same thing they do, some store will extend to 161.8, and most of the time over the year they usually change direction. With that statistics, okay, the quantum traders, the algorithm traders will set their computers to sell that specific stock at that point in time. It's a trading method. But now we are talking about real-time trading when an individual trader is placing a trade. This is the kind of thing you will do. But there is a better way to do it. I'm going to start drawing lines on this chart, okay? I recommend to traders, okay, who do not have the NISE trade. If you are TSTW24 trader, we'll give you the NISE trade for free. By the way, I need to send the NISE trade to a trader today. All right, a gentleman in Germany. All right, so I will be sending it very shortly. If I don't send it today, hear from me by tomorrow, okay? All right, because I'm a busy bee, okay? All right, so we start drawing line. Okay, see, there's this point here. You see this, the high here, price went up, hit it, change direction. It's a resistance, isn't it? And it went up from this resistance, went all the way up here. Hit it, change direction. This is the line that I draw here, joining this point and this point. So I'll start drawing a trend line like this. I'm on a weekly chart. I'm looking for a setup. But because I want to trade where? On the edge. Trading on the edge at stochasticmarket.com. Check it out. Okay, on the edge. For day trading, swing trading, position trading on the edge. Allow me to enter the trade at a low risk entry point. I don't want to jump in the middle and they kick me out. And I'll start going on, licking my wounds. All right? Okay? It makes sense? All right. Let's continue. Okay? Let's continue. Fibonacci trading. So we draw this line. So, okay? You see that the price did not touch it here. We can leave it here. We leave it. It's our chart. You see that very often you see my chart. I have too many lines. Some of the lines, I don't want to remove them. All right? I don't want to remove them. Okay? Like for the euro, dollar currency pair that I was looking at on the 15-minute chart, I have too many lines right now. The reason is I want to keep them. All right, I was thinking to show you the euro dollar. What is it hiding? Okay, and you will see I have too many lines now because I need them on my chart. It's your chart, okay? So leave it like this. Just leave it here, okay? So this is not useful for us right now, but we leave it there. We can also, so you draw a line like this, you can draw another line that is parallel to it because it's going up. We can choose just this point here and then draw a line that is parallel. Okay, I like that. We see parallel. You see, huh? Now, that's where it is now. So by doing this kind of exercise, you see clearly whether you should sell or buy. So though we are at 161.8%, apart from everything that we have investigated so far, it doesn't look very, very bearish right now. Doesn't mean that it's bearish. Doesn't mean that it's not bearish, but the information that we are receiving doesn't give us confidence to jump on it and force it down. All right. The sentiment in the markets, okay, this is one thing as I'm drawing line, I want to talk about it because I remember now, okay. Whenever you are using the technical analysis, all right, of fundamental analysis. You want to always check the market sentiment, the market environment. What is the market sentiment towards the dollar right now? The market want to buy the dollar. Why? Because the expectation that the Federal Reserve, the United States Federal Reserve, will start putting up interest rates. A change of the previous policy of quantitative easing, which is a dollar printing non-stop. They have stopped now. So the language that the Federal Reserve is using, carefully, smart. All right, I hope a lot of traders know about it. Listen to the market. Conditions are improving, and they are, whenever the condition, everything aligns, okay? The market is improving, the job creation is improving. When everything is ready for us, everything is set up nicely, we put up interest rate. Now, that language is very clear for the market. Keep buying the dollar, keep buying the dollar, keep buying the dollar. We will soon put up the interest rate. So the market does not want to fight this elephant in the market. So, all right, they keep buying the dollar. All right. The same thing, the New Zealand dollar. Are you trading the New Zealand dollar? They have central banks said that they don't want the New Zealand dollar to appreciate against the dollar. People were selling the New Zealand dollar. Are you aware of it? All right. I'm bringing now. This is, you see, this is the Australian dollar. Oh, now this is not the correct one. I want to show you the US New Zealand dollar currency pair. Where are you? Sometimes I'm looking through this. I can type it too. Okay. USD and ZD. Okay, there it is. It's coming up. Okay. See here on the weekly chart. So once they said that, the market say, thank you very much. You want us to sell? We'll help you do exactly that they were selling, okay? And now it start going up a bit now, okay? But then you see all this time they were selling it because of the policy. It's about the market sentiment, okay? For the euro, they know that, okay, the Federal Reserve, the ECB, the European Central Bank, ECB stands for European Central Bank, managed by Mr. Draghi. Mr. Draghi is a very smart, okay? All right? Person, very, very smart, okay? I like him, all right? Mr. Trichet was teaching a bit, but Draghi is smart, okay? All right, but Mr. Trichet also is a great man, all right? So, I speak French, Mr. Trichet also speaks French, so it's great, all right? But, okay, so this is about the market sentiment, market environment. So the Federal Reserve, okay, want people to keep buying the dollar until they put up the interest rate. They may not even put it up, but the dollar goes up nicely, and then they will say, we had enough, the competition is too much for us, now we will not put up the interest rate. The condition did not align very well. We will put it aside, okay, until, okay, further notice. And then people start selling again because they don't like it that the dollar is appreciating too much, okay, in relation to other currency, and the goods of United States are becoming too expensive, all right? So it's all about, okay, the market sentiment. We are talking about the dollar yen. We are also talking dollar yen. We are talking about the yen. What's happening in Japan? Okay, the market environment, they want to print the yen. Okay, so going back again to Forex trading. Let's see how long I've been talking to you, my friend. All right, 23 minutes. Let's see whether we wrap it up around 35 minutes, okay? So we are doing this investigation because the price is at a Fibonacci extension zone. We don't want to violate the market pattern, which is bullish right now, and the price at the lower end of the rising channel, and also, okay, has displayed a higher high. But let's investigate this a little bit deeper, okay? This is what you need to do, okay, all the time. On any time frame, let's draw the middle line. Sometimes they forget it. So now we draw the middle line. You see now the median line of the channel. What has happened is that the price went inside this channel, was above it, but come back below the rising channel, went even outside, but now it's going back inside, but it stopped on the edge of the median line. So the bear will smile a little bit or even salivate like Pavlov dog. All right, we say this is selling because of this resistance here. You see why it is selling here? So in fact, this 161.8% Fibonacci extension zone correspond also to the edge of the median line of this rising channel. So we have the horizontal line. When you see horizontal line and the rising line crossing like this, zoom, okay? All right, it's a junction, all right? Do you drive, okay? Junction, all right? Here it is, collision, all right? Of two lines, it's an energy point, all right? Energy point, okay? So That's why they sold it. Now, as they sold it, we investigated this already, price did not display a new lower low in relation to this low here. So we are hanging on the edge. So we can't be completely bearish. If you want to sell it now, you see here, it found a resistance here, come down. You see, when it went exactly to the same place, it was a bearish setup. Trader applied, they traded it, they sold it. Now we are here. You remember the trend line, the red trend line that I draw? We are sitting on the edge of it. All right. Let's continue with our investigation. Why are we saying all this? All right. Because we want to make, okay, an accurate decision using the Fibonacci extension. We don't want to use the Fibonacci extension as a magic one and commit, okay, a crazy mistake. All right. That's what we are trying to do. All right, you don't want to lose. That's the bottom line. If you apply to Goldman Sachs and they ask you what is the bottom line, what the interview they ask you what is the bottom line in trading. You apply for trading. You say, "Oh, I've been trading with TSTWSYZOA for some time. All right, I was following a crazy trade out with too. All right, and I can trade." They say they test you, you trade very well, and then in the interview they say, "What is the bottom line in trading?" You know what you need to say? The bottom line is to make money and not to lose. They will love you for that. Not to lose. All right? Not to lose too much. All right? You can lose, but not to lose at the end of the day. When you add everything up, losing trade plus winning trade, losing, you don't want to lose. Okay? Now, so we see the rising channel. We see where we are. This is about navigation in the market, all right, in this messy market. Where are we? Where are we going? Are we at a junction? Are we at a resistance zone? Are we in a support zone? Okay, are we on the edge? So we can make a better decision. So from the weekly chart like this, a TSTWSY is usually a trader. We go to a signal time frame and they break it down and they use the TSTW key 02 to enter the trade. A TSTW24 trader who want to day trade on the edge will go from the setup directly to the first best time frame. When you reach the first best time frame, you will draw again the channel, the line again, exactly the same thing. All right, or you can break it down from the third best time frame to the first best time frame. All right, from the second best time frame to the first best time frame. First best time frame for entry. Now, there is another tool that is very, very important that you must use, my friend. It's the Pitchfork tool. You are using Fibonacci extension, my friend. I highly recommend that you use, please, I'm begging you, my dear, I love you so much, use, okay, the Pitchfork tool. Very simple. 3 points we need to use. So go to www.dayprotrader.com, click on Pitchfork tool trading, okay, and you will see videos there. If you don't understand my accent, get used to it slowly, slowly, all right? Use the headphone, all right? All right. Now, this is another story, okay? So the Pitchfork tool, this point is the first point that I choose. So price goes up, price pull back, and then start going up, okay? Go. So I don't want the video to be too long, so I will send you to dayprotrader.com instead. 1, 2, 3, okay? So I draw this Pitchfork tool. You can see that the price did not come very close to it. So I will know straight away that, okay, it's not very useful for me now, okay? When you are using a Pitchfork tool, try to go into the mind of other traders, because you draw it like you say, okay, John, so what? What should I do? This is useless tool. It's not helpful. Okay, now go into the mind of other traders. Other traders will put it here. So they will use this point, this point, this point. You look at it. So what has happened? See here, it came near the edge of it at this point in time. So you say, all right, do I need it? Is it useful right now? It's not. So, okay, go to the mind of other traders. Some traders will put it like this. Are you with me? All right, so you see, okay, it come a little bit near it, but not very close. But something else you can do with the Pitchfork tool, you put it like this. You see those, you see it's a 2 channel, isn't it? The brown channel. Oops. Yeah, you can do this, okay? You can do this. I will show you here, because I want you to understand it. So no one is messing up the market, okay? We have an orderly market. Okay? Now, here it is. You can project that small channel. That's what I'm trying to say to you, okay? Come out of it, you can project it. All right? You can project it. All right? And you can also use, okay, the median line of the projected channel. So if I do something like this, see, I project this smaller one, okay. Okay, it's my chart, isn't it? That's what I say all the time. I can draw on it and do whatever I like. Mess it up, clean it, put it back, okay. When you see a channel, always, if you don't have to draw it, but you just be aware of the median line. Always be aware of it. Okay? So just think of it. Where is it? Where is the median line for that channel? Whether it's a small channel, any channel, just think of it. Where is the median line? Okay, for this channel. Am I cheating? Okay. All right. Okay. All right. So we can say we are sitting on it again. Let's continue with the Pitchfork tool. You'll see soon how valuable is this Pitchfork tool. If you are using market geometry, you must use the Pitchfork tool. So you may say to me, George, okay, it's not working, okay? The Pitchfork tool is not working. Then I'll say to you, my friend, do not cry, okay? We're going to use another point here. Now this time, what we're going to do, we use these points. So price goes up, price pull back, okay? Price goes up, price pull back all the way here, okay? So I put the first one here, goes up, okay? And then come down, okay. Oops. Yeah, put it back, okay. Once it's 1.8, Fibonacci extension zone. Like this. Price goes up, price pull back, okay. Are we in the same, okay? So this is a little bit useful, isn't it? See here, one, boom. Use it for detecting. You are using TSCW34. You can go to the daily chart. Go to the 2-hour chart, 4-hour chart, use the Pitchfork tool to determine the edge and then break it down to the first best time frame. You can go even from the weekly chart on the edge and then, okay, day trade on the edge, okay. So you know that it's a resistance here. It's a bit hidden, isn't it? All right. But the Pitchfork tool also will reveal to you some hidden support and resistance level. Nice, okay. Now, where are we? We went above it, that Pitchfork tool that we put now on our chart, and now we are hanging somewhere. Remember what I said, anytime you see a channel, think where is the median line. So we are somewhere again in the middle of it, sitting on it. All right. So we are sitting on too many lines for this one. So it's not very, very bearish right now. So if I want to sell it, I'll prefer it to come back to this resistance zone or to break below this trend line. Break below, okay, remember, retest, okay, turn around, break below, retest, bearish setup, use the trading drill, and then take it down, all right? Or, because this is what we want to do, or if you stay here like this, I don't like it like this, prefer it to go back up, return the resistance level, and then take it from there. Or, it may just continue breakout, because this is the market sentiment. The Federal Reserve want people to continue to buy the dollar yen. But in my view, there's another pattern here, the ABCD chart pattern. Go to stochastic.com. All right, price goes up, this point, okay, and then pull back. You see, went up a bit. This normally the dollar. This is a distorted financial instrument. I said to trade 100, this is a distorted market pattern because of the interference of the Federal Reserve. They are not manipulating the market. They are doing their job, but it creates a distortion in the financial market. Okay. Who am I to criticize the Federal Reserve? Okay. A, B, C, okay, D. All right. In theory, the distance from A to B should be equal, but not always. You can see that it's not equal here. So it's the prior move is here. It's longer than where we are now. Oops. Are you with me? So the prior move, the prior bullish move is from here all the way up here. But you see this 1, 2, 3 is an invitation to buy here after a higher low, a low, a higher low. The price failed to achieve the same, okay, bullish, okay, strength as it did here. If it failed to go above the 161.8% level, it's bearish. Theoretically, it's bearish. Now we must use our tool to do exactly that. But if you are doing that now, you are trading a crazy currency pair, you are fighting the market sentiment, the market environment, and the Federal Reserve because they want people to buy the dollar yen. You can also day trade, sell it, and then quickly run out, grab your profit, go. Okay, hide and seek, okay? Because you know that it's a contract trade. So where are we now? So the Pitchfork tool, you see how it's allowing us, okay, to see, okay, the hidden support and resistance level where we can make, okay, excellent trading decision. All right. I'm going to move it again, this Pitchfork tool. This time I'm going to put it here. All right, put it here. All right, you see that the picture has changed a bit, okay? See here? Now that before we would put it here, is it? Okay, so we're here. All right, we use this low, went up, pull back. So if I consider that the up move, you see here, it start going up, is it? You see, if you ask your child, suppose your child is saying, yeah, it went up from here, isn't it? Why did you put it in here? All right, so you can say, okay, going to the other trader, we put it here. Went up, come down, went up here before pulling back. You can do that with Pitchfork tool. It doesn't have to be straight line. Well, it doesn't have to be. Sometimes you see 1, 2, 3, but the move is up before this move. You can do that. So play with the Pitchfork tool like this when you are using, okay, the Fibonacci extension. So if I put it here, all right, what are we doing? We are again sitting on the edge of this one. So are you with me? All right. For day trading purposes, the way it's sitting here like this, we can draw a tiny line like this, okay, the level of 11923, color into red, okay, because we're in a resistance zone, okay, and then we can now we can go, for instance, let's go to a 2-hour chart. 2-hour chart is better than the hourly chart because, okay, now my data disappeared, okay. It will come back. Sometimes this is happening with TC 2000. I need to ask them why sometimes I have this. It's just blank. My internet is connected, as you can see here. It's connected here, okay? So you have a beautiful, okay? So, sometimes I don't know. If I change time frame, okay, let's go back to the weekly chart. It will come back, okay? What I'm going to do, I will pause the video for a second and I'll fix it and I'll come back to it, okay? Pausing the video. Okay, it's back to normal. So, okay, what I'm going to do, hold on please. Let's bring it back so you can see we were here on the weekly chart and we draw this red line here because we are in a resistance zone, okay? So what are we doing now? We are trying to investigate, okay? Should we sell straight away? Is he ready? Is he cooked? All right, all right, or not, okay? Is he rare, okay? Is it done, all right? That's what we are trying to figure out now. So what's the plan? Should we buy for a while? Should we day trade instead? Is he a beautiful swing trading setup? It's not a beautiful swing trading setup, all right? Okay, so in that case, we can switch to day trading. If you're not a day trader, then you go away, put it on your watch list, but keep your left eyes on it, all right? Okay? So now I'll draw this line here. Suppose I want to day trade this. Okay, let's go. We're on the live chart anyway, trading for them. I was thinking to go to, okay, now the data is here for the 2-hour chart. So look what's happening here on the 2-hour chart. We have what we call, it's a bearish pattern, yes or no? An inverted head and shoulder. The TSTW24 traders should be able to trade this pattern beautifully. You shouldn't get into trouble with this pattern, okay? Read the document properly, all right? So this is, I was recording a video yesterday talking about RSI indicator, tips and tricks, part 2, and also part 1. And I was talking about how one can combine the overbought and oversold RSI indicator with a pattern that is completed. Whenever you see a pattern like this, traders see like this, they say, yes, it's bearish. They sell like this straight away. They will sell. Okay. Suit their trading style. They know what they are doing. That's their decision. A more conservative trader may not do that. Okay, the pattern is not yet ready. It's been formed, but it's not cooked. It's not done. It's still rare. Or you eat steak, you want it medium, you want it rare, you want it done. All right? All right? American restaurants, okay? So, how do we want it, okay? Do you want it rare, or do you want it medium? Do you want it cooked? Do you want it done? Okay? I like it done, okay? Perfectly cooked, all right? I don't want to see the blood. I want it cooked, okay? Now, so, it's not ready. But very often, traders see that they say, it's ready, but it's not ready yet. So, because it's not ready, I'm going to show you something else. You see, I was telling you that by the end of this video, you start using the Pitchfork tool. You love it. So you see that it's not ready. So price went up from here all the way up here. Yes or no? I said to you, even if you break it down, you can do that. It went up from here all the way up here. And then now it come back down and start going up. So if it come down, it must start going down, going up before you use the Pitchfork tool. So here it is. We can use the Pitchfork tool. All right? So in this scenario, I can put my Pitchfork tool like this. I know it's not ready, George. It's not cooked. You don't like it rare. You don't like it medium. You want it cooked down, all right? So if, for instance, I decided to join these people because I see blah, 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 blah on a 2-hour chart, I want to join them. By the way, if you are TSTW34 trader, from this point you start selling, you need to be careful, all right? Because it's not done, all right? This resistance is a psychological price level because it's the high before the last high. It's testing it here. But you see how messy it's becoming now? Because hedge funds are buying the dollar yen until something else is said or something else, the market sentiment has changed. So in this scenario, because it's not ready yet, you see this is a resistance we have seen on the weekly chart yesterday, on the red line. Okay? But suppose I'm itching, so to speak, itching to day trade. I love to sell the dollar yen, okay? All right? So I would prefer it instead, if it comes something like this, touch this one here, that would be a better low risk entry point for me because it will form at that point a double top, something like that. After doing this and going back here on the edge of my Pitchfork tool. But if I did not have my Pitchfork tool, I won't be able to see that the hot spot trading zone. But it doesn't mean that if the price reaches that hot spot trading zone, it will definitely change direction. It doesn't mean that. All right? Doesn't mean that. But with the Pitchfork tool, we can see where is the best place we can come into the market. Timing is the most important thing. Enough said, my friend. So, you see the picture now? All right? But does it mean that the price cannot go down here like this, okay? Why I'm saying that the pattern is not ready yet? So, maybe you say to me, George, you are saying to my nonsense? I'm fed up with you. I'll go to stochastic.com and I'll subscribe. I've seen the trader unsubscribe and they come back most of the time. I don't understand. As a new trader, I've done it myself many times. I unsubscribe from some website, I go back again, I subscribe again. And I do it many, many times because I was trusting a trader get fed up. And, okay, you know the emotion, okay? I understand perfectly, okay? So the pattern is not ready yet, okay? It's not ready. This is the neckline, okay? All right, of the inverted head and shoulder. In normal condition, professional prefer to sell at this, so break below this neckline here, and a further resistance. It's very important. Validation of okay, the head and shoulder pattern, and further resistance on the edge. But there are other smart traders. This is what I'll say to you. That's why you're going to love this tool. They prefer buying on the edge of the Pitchfork tool. So from today, you'll do exactly the same thing. You see the head and shoulder pattern, you can do the same thing for the inverted head and shoulder. All right, you do it for the inverted head and shoulder, you can do it for any pattern, in fact. So you see that this is not cooked, you are afraid to enter here and be kicked out because the smart money want to sell, they want to sell at the best place. So they see people placing order here to sell, they are looking at them and say, what are they doing? Professional, very often, ordinary trader will enter the trade before the professional. Why? Because the professional are waiting for the price to hit the best place where they can sell. But ordinary trader couldn't be patient, so they just say, okay, I'll give it, I just buy, I just sell. Okay? And but the professional, they say, I don't like it like this. I don't like it like this. I prefer it to go here. So if you use the Pitchfork tool, sometime you will see other traders that are selling here straight away, which is not bad. But if you are selling here like this, okay, remember that it's not ready yet. There is a support here. Until this support is kaput, the bearish momentum is not ready. This is one thing you need to understand about this pattern. This support should be kaput. We have a filter with the TSCW24 that we use for filtering out this messy trade. But again, for the TSCW24 traders, use the Pitchfork tool. You see like this, all right? Use the Pitchfork tool. And sometimes you will see the price will rush, take these people out. They will run fast because their stop loss is sticking out. Price will come all the way here. A better place to enter the trade. Doesn't mean that the price will change direction here, but it's just a low risk entry point. So from this point onward, we can go from the 2-hour chart directly to the first best time frame. It can be on a daily chart. If you did that, we can go from the daily chart and day trade or swing trade on the edge. So use the Pitchfork tool. So to summarize this video, we will see a Fibonacci extension level. It's a resistance level. It's a support level. We know the meaning of a support. Two things can happen. Price can gain support there or break below and retest and turn around. All right, we can sell at a support level. We can buy at a resistance level. But at the resistance level, the first thing that is coming to our mind is to sell. Like if the price breaks above and find a support, we are not going to fight. Sometimes the price may break above it, as I show you on a daily chart already, how it turn around. That's why we say to traders, so breakout traders, okay, wait for the candle to close, okay. You remember what I was telling you on the turnaround, okay. See that sometimes breakout, be gentle. Just watch it and say, this is what I want, or highlight the high and the low of the breakout candle. If you're on a daily chart, you highlight the low and the high. If it's going to be bullish, it might display high, low, high. So you can draw the high and the low, even the median line. The price may pull back to the median line before continuing to go up if it's a true valid breakout. You always use, okay, the trading drill. My friend, I've been talking to you now for 47 minutes. I'll wrap it up soon, okay. This video is very important, and we were talking about Fibonacci extension, how we can use normal trend line, normal support and resistance level, okay, channels, okay, we can project channel, and how we can use also the Pitchfork tools, okay, to determine whether we should buy right now or whether we should wait, or whether we should sell right now or whether we should wait. But at the end of the day, we are not trading the Pitchfork tool or the Fibonacci extension. We are trading the price. We must always pay attention to the price and trade on the edge. With this information alone, you are likely to improve your day and swing trading decision. Before I close this video, as I'm talking about validation of a pattern, which is very, very important, it's happening all the time. Even experienced traders, I see them sometimes, they repeat exactly the same thing. And now, but you don't want to do that. Even for a double top, for TSCW24 traders, you see on a 50-minute chart, okay, double top, you see like this, okay? I recorded a video I just to you, we call validation of the double bottom. I will be recording another video about validation of double top soon. So the double top will become a valid bearish pattern if this neckline here is kaput. This, what I like to call the knot here, is kaput. This is critical. So you start selling here, sometimes the price will come and touch it here and then go back up and kick everybody out because the pattern is not ready yet. You must break below it and find a resistance, okay? So wait for the pattern to be completed. But the point I want to add now, which is very, very important, the tool I'm going to talk about again is the Pitchfork tool. All right, again, you will love it, okay? You love it. So you see, wow, you see a price goes up, display top, pull back, display knot, and then display double top. You say to me, George, I love you so much. What do you need to do? You will use the Pitchfork tool from the beginning of the move that went all the way up here, and then you will 1, 2, 3. You remember, for Pitchfork tool is 3 point. All right, you get a message now. All right, see here. You do exactly the same thing. Okay. 1, 1, 2, 3. All right. If you remove your pitchfork tool, you can just draw a line there, keep it there. Because sometimes the price will come back down like this, as it's coming down like this. People think that it's going to break below it. It doesn't. And the next thing the price will do, the price will go back and hit this one to display a higher high. The bull will think that it's a bullish breakout, but it's not. And then from there, it will just start going down. Traders who understand the flat area wave correction will know that very often we go to 138% Fibonacci extension zone. After a double top, price will do 1, 2, 3, and then boom. Or sometimes the price will display higher high. So you have a double top where one top is higher than the first one, not equal high. There are variations for double top. Sometimes one high will be higher, but it's still a double top. Okay? So use the pitchfork tool, okay, to determine the best place, okay, to enter the trade if the pattern is not yet ready. So this one scenario, 1, 2, 3. You can also do this all the way here. 1, 2, 3. Here it went down. But it went down 1, 2, 3. All right? Do 1, 2, 3 with the pitchfork tool like this. All right? You can also do this. It's your chart. You can also do this. 1, 2, 3. All this exercise, all you are trying to do is to see the best place to come into the market. So sometimes the price may go, instead of going all the way up here, we just go like this a little bit here, hit this one here, and then come back down. Why am I talking about double top and double bottom and a validation of a pattern when the pattern is not completed yet to determine the hotspot trading zone? The reason is, my friend, when the price is at a Fibonacci extension zone, either it's a support or resistance level, we will perform this kind of investigation, all right, to determine the best place to buy or to sell. At a resistance zone, very often we see a bearish chart pattern, all right? At a support level, we usually see, okay, a bullish pattern. But sometimes the mistake that traders are making when they are using the Fibonacci extension with the price pattern, they get into trouble because the pattern is not yet completed and they rush into it. By using the Pitchfork tool, we are likely to navigate through these messy markets and to enter the trade at a low risk entry point. It makes sense? It makes sense? It is also powerful. So we were talking about going from the daily chart like this, so we can go from the weekly chart directly to the hourly chart. No, in fact, we were going on the 2-hour chart. And again, the same thing you see now, we are at the Fibonacci extension zone, the 161.8% zone, and the price is forming what? A bearish pattern, but, which is the, okay, the head and shoulder pattern, but the pattern is not yet ready. Now, at this stage, smart traders, professional, will use their Pitchfork tool to navigate through this messy market. All right? If you break below the red line, see, yes, so suppose you say, George, it's going to go down. I know it's going to go down. So, okay, draw the trend line and trade on the edge. So you want to enter now, use 20 pip, you kick it out, don't call your mother for it, okay? Because it's not ready, but you want to give it a chance. It's not ready, and you want to give it a chance. It's up to you, okay? Very trend line on the edge, on the 2-hour chart. Okay, don't enter on the 2-hour chart, please. Consider that as your setup. You may go direct 50-minute chart, zoom into it. Okay, here we are on the edge, on the 50-minute chart. What are we seeing? This is what you will see. If it's bearish, you start seeing some bearish pattern. But now you want to analyze whether the pattern is completed, yes or no. This is critical. You can see it's a double top. Is it completed? No. 9. 9. The 9 is a German word. No, I'm Francais. Okay, so, all right, this is to help myself breathe in and breathe out, okay? That's why I make sometimes jokes like this, so don't think that I'm doing it. Just, sometimes I do it because maybe, all right, I want to pause while I'm talking at the same time. So, this is what we see on a 50-minute chart on the edge of, so I will call it that bearish trend line now. into pink to please the beautiful ladies. Okay, so now you see double top so far. Okay, I can, if I want to sell this, I can sell it. But now, where is the price? The price is 119.19. So I'm going to look at the top here and say, okay, 119.38. So if I decided to jump into it now, I'll use at least 19 pips to place my stop loss here. But I also know straight away as a day trader that this is not ready yet. Okay, you see now? So from the 2-hour chart, we go to the 50-minute chart. On the edge of, so you see first on the weekly chart, we draw a resistance level. We come to the 2-hour chart. We see, okay, a head and shoulder pattern, but it's not ready. We use our Pitchfork tool. Now from the 2-hour chart, we are now going into the 50-minute chart. Now on the 50-minute chart, we are seeing a double top, which is not also ready. Are you with me? All right? Because I want you to master this once and for all, so you can use the Fibonacci extension like a professional trader. Which tool we can use here because the pattern is complete, it's not completed. Pitchfork tool. You see, remember? Went up, come back down. 1, 2, 3. You get it now? We can put it there like this. All right? Okay? So, because it's not ready yet, why? Because the nut is not yet broken, my friend. Okay? This nut is not broken, it's not cooked yet, it's still rare. All right? See, rare. If I don't pronounce it correctly, okay, all right. Traders, send me email and tell me sometime that, George, that's not the way you say it, okay? We are friends, you can say that, okay? You can put comment, we are friends, okay? So now, as you can see here, we have a double top that is not cooked yet, so to speak. It's not ready yet. It's not completed, okay? So, gentle. Another trader may see in a different manner and say, George, this is a round button. Prior return to a circle point. Okay, so which means this trader want to buy. If he or she want to buy, he would like to buy a bow, this horizontal line, break a bow, or it test, turn around. Or if that trader is so excited to buy, the trader who does not want to trade against the Federal Reserve, he or she may decide, okay, George, I disagree with you. You are my friend. I love you. But you sleep on the sofa today. Okay, so I'm going to buy instead. Okay, so buying on the edge of this Pitchfork tool here, and expecting the price to go up and break this horizontal line and to continue to go up. Remember what I said to you. Professional always prepare for two things. Financial asset can go up and also can go down. I hope you have learned something from this video also about Fibonacci training. We are talking about Fibonacci extension, which is revealing to us a hidden support and resistance level. We know how to trade around support and resistance level, all right? But we must use the Pitchfork tool and the top-down trading methods to avoid the Fibonacci mistake. With this video, one is able to improve a Fibonacci trading and avoid common Fibonacci mistakes. Thank you for your time. And if you like this video, please give us the thumbs up. If you dislike this video, I beg you to give us the thumb down. But if you give us the thumb down, just write something there. The video was too long, George. You were speaking too long, too much blah, blah, blah. Okay, something like that. And this will help us, okay, to improve our recording as YouTube creators. If you love it, you say, George, I truly love it. As I have some good friends on Google+, share it on Google+, share it on Facebook and Twitter. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders talking about Fibonacci training. Speak to you soon.